We are covering the critical process of claims handling and loss investigation for the National Property and Casualty exam. This entire process begins with the first notice of loss, or FNOL. The exam expects you to know that this is the initial report of a potential claim to the insurer, and it triggers all subsequent actions. Immediately following the FNOL, the adjuster's first step is coverage verification. They must determine if the policy was active on the date of loss and if the loss itself is a covered peril. An exam question might present a scenario where a homeowner with a standard policy reports flood damage. You must recognize this is typically excluded and coverage would be denied. The next phase is a thorough investigation. The adjuster's job is to gather all the facts to determine liability and the extent of the loss. This includes interviewing the insured, any claimants and witnesses, as well as gathering police reports and other documentation. The exam will test your understanding that the adjuster's role is to be an impartial fact finder. As the investigation proceeds, the insurer sets a claim reserve. This is a crucial concept for the exam. A reserve is an estimate of what the insurer expects to pay for the claim. It is not a final settlement offer, but a liability on the insurer's balance sheet to ensure they have adequate funds. Reserves are adjusted as more information becomes available. Throughout this entire process, meticulous documentation is required. Every conversation, finding, and decision must be recorded in the claim file. Once the investigation is complete and liability is clear, the process moves to settlement. The adjuster will negotiate a settlement with the insured or a third-party claimant. This could involve paying to repair or replace damaged property or paying a liability claim. Upon agreement, the claimant typically signs a release, which closes the claim. Two other key terms you must master are salvage and subrogation. A simple way to remember the difference is this: subrogation sues, salvage saves. Salvage applies when the insurer pays for a total loss, such as a totaled car, and then takes ownership of the damaged property to sell it and recoup some of the loss. Subrogation is the insurer's right to sue the at-fault party to recover the amount they paid on the claim. For example, if another driver runs a red light and totals your car, your insurer pays you for the loss and then sues the at-fault driver's insurance company. Finally, let's discuss a major exam trap: unauthorized promises. Producers and adjusters must be extremely careful with their communication. They cannot admit fault on behalf of the insured or promise that a claim will be paid. Doing so could legally prevent the insurer from denying the claim later, a concept known as estoppel. The adjuster's role is to investigate, evaluate, and recommend a course of action, not to make binding promises about coverage or payment. Forgetting this can lead to significant legal and financial consequences for the insurer. For free practice questions, AI-powered explanations, and more exam prep tools, visit openexamprep.com. That's openexamprep, all one word, .com.